Good afternoon, Peter Klein, Chief Investment Officer, Co-founder, ALINE Wealth. Here with you this evening. It is the 30th of January, 2024. First briefing of 2024. We're going to go quickly tonight. I'm going to share my screen, give you a baseline of what we're thinking about, where we're seeing some opportunities, and frankly, where we're seeing some concerns. So bear with me here, and we will proceed. Okay, first things first. The inflation story, in our view, is not yet over. This slide speaks to that. This slide shows you in past periods, going back 100 years, you've seen this sort of up, then a little lower, and then back up again. Inflation, the inflation genie is not easy to get back in the bottle. It gets pervasive. It gets its claws into the economy, into the psyche of consumers. And that's where we are today. Add to that the opportunity, the issues of labor ascendancy, more labor power, inflationary, geopolitics and war, inflationary. And then finally, as I've said a number of times, we believe that the move to net zero, if you will, over the next couple of decades will be inflationary, required, but inflationary. Next big bugaboo, if you will, out there today is debts. We got a lot of it, and it's an issue. As you can see in this slide, we not only are spending too much versus our income at an annual basis, but we get a load of debt, both national and unfunded pension liabilities. Not a good picture, especially when today we have higher interest rates to service that debt. And this is a slide that shows you the same situation, but on a relative basis. We're not supposed to have this amount of debt, in peacetime. Okay, we're not in a war, thankfully. So this worries me very much. It should worry you, and it has implications to the dollar and to the economy, crowding out. How's the government going to spend the dollars that they need to spend if they have consistent deficits? So these are issues here. Okay, two macros. So those two macro points combine, and we have sort of the setup, if you will, the setup of where we're seeing the last 50, 60 years. We had this run, post World War II, and it was a run of people coming back from the war, buying homes. Of course, we had that debt, and inflation moved higher, and this is the 10-year bond moving higher with it. And of course, you had the parabolic move in the 70s. Okay, that was period one. Let's call that, right? Almost 40 years. The S&P 500 over those 36 years averaged 5.7% growth. Okay, and then of course we had the greatest bull market of all time, the greatest bull market in bonds and stocks and private equity, artwork and real estate, multiples on stocks, anything you can think of except for commodities went up over this period. And that's because the price of money went down for 40 years. Lots of good things happen to holders of paper when the price of money goes down consistently and precipitously for 40 years. Look at the CAGR. True proof in the pudding right there. Double of what it was previously. So the question is, are we in some way going back to this period, or are we in fact back to a new regime, or likely the old regime of the 50s, 60s, and 70s? I'm thinking we're more likely here. And that's why, and for the reasons I've mentioned, why I feel that inflation will be stickier, rates will stay elevated relative to where they were, and that's going to have implications for the S&P 500. But have no fear, because your friends here at ALINE Wealth have found opportunities for you to consider. But before we go there, again, caution is warranted. This is a slide that shows you how the markets run up. This is the black line, the markets run of this is the price per share, right? Has run up. And of course, some of that is buybacks, okay? But the earnings have not. Actually, you could actually factor out the buybacks by using the per share on both. So there you go. The multiple has gone up. And that's sentiment. That's people making a vote every day on markets. That is not empirical. And to my thinking, this gap has to close. Which basically means either earnings are going to catapult higher, maybe it's AI that will take us even way higher. I believe that's true. I just don't think it's going to happen so quickly. And then secondly, price per share has to come down. Okay, so the opportunities, number one, international. It's been all US all day for the last, 15 years. It's time to look at international, developed companies, even in developed countries and even emerging countries. This shows you the S&P PE minus the MSCI World excluding US PE, and as you can see, it's elevated. It should be closer to this range here, right? It's elevated, which tells you that it very well may be a good opportunity internationally. This shows another the same kind of story, but this is small cap value and cheap, really cheap and opportunistic, I think, at these levels. So I like small cap value globally. Thank you for your time and your attention and your continued vote of confidence. We at Align Wealth wish you a great 2024. We're going to be we're going to be your co-pilot, right beside you and working towards increasing wealth and keeping you on the right path to investment success. Of course, we're here to chat with you about your legacies and your investment portfolios and your philanthropic interests. Feel free to reach out to us. Look forward to chatting again soon. Thanks, everybody. Good night.